Welcome to another episode of the Smart Real Estate Coach podcast, your source for actionable real-life examples and advice to help you move to the next level of investing. Each week, we help you make a quantum leap in your business, your finances, and/or your life. We want to help you take back control, help you thrive during chaos, and lead you through the current crisis to a better tomorrow. For more resources, check out smartrealestatecoach.com and be sure to give us a rating and review on your favorite platform.
Okay, Wicked Smart listeners, it's Chris Bree, your host again with Smart Real Estate Coach podcast with another amazing guest. About a month ago, I was on Michael Blank's show. He has his own podcast as well. It's called Financial Freedom with Real Estate Investing. That's a writer downer again. Whenever I'm on someone's podcast and it strikes me as something that would benefit you, I go, hey, you got to come back on our show on my end and let our listeners hear about you. Now, that's kind of picked sparingly, because we've got such a large audience, you, the Wicked Smart listener, and we have such a huge demand to get on the show. Mike's a real estate investor. He's a best-selling author. The book's called Financial Freedom with Real Estate Investing, very much like the podcast. He's a speaker, and he is certainly an authority in what space? Apartment investing. He's the CEO of Nighthawk Equity. Guys, he controls a lot of real estate, like over $300 million worth of real estate, and he's helped students actually purchase over 40,000 units. So there's the same sense of in the trenches that you get with us, in that Michael does deals and then he coaches. There are so many people, you guys have heard me scream about this, that are doing a deal or two since, let's say, I don't know, let's pick a year, let's say since 22, and all of a sudden they're a master coach. And then the first curveball or economic curveball comes at you and they have no idea how to help you. Well, that's not Michael, and that's not us. That's my real estate coach. I want to have him on with the plethora of experience he's got and just throw another angle at you guys. And please understand, this is not about a shiny object syndrome, ever. This is about stacking your knowledge piece by piece, not getting thrown off by the shiny object syndrome, but adding it when appropriate. So when would it be appropriate, for example, to add multifamily? In my opinion, Michael and I will talk about this. Well, why don't you get yourself on your feet after doing some wealth stacking with our trademark 3 payday system, and then decide, hey, I want to invest with some of those associates I met at Smart Real Estate Coach, or hey, I want to go into some multifamily or some mobile home or some storage. Those are your options when you start wealth stacking at the level that we wealth stack. Our average 3 paydays run from, as you probably know by now, if you're new to the show, it's 45,000 low to a high of 350,000. In February, I think it was February 24, we hit that one. So these are not small deals, and it allows you to look at other things. Right now, no. You'll run around like you're drilling wells and never go anywhere. I do suggest you stack one niche for about 2 or 3 years, and then you can start delving into other things, and that makes for a super, super cool portfolio. So with that as a little bit longer background than usual, welcome to the show, Michael. All right, Michael, with that as a background, welcome to the show, buddy.
Hey, it's good to be here, Chris.
Yeah, good to see you. I think I was on your show like a month ago, maybe.
Yeah, it was a great conversation. Learn about you and your background and your creative financing, and it was pretty cool, and how we applied that to larger apartment buildings.
Yeah, we got to hang out more and we'll dive deeper. But for now, other than what I did in the intro, why don't you give these guys sort of a behind the green curtain, how you got here, and then we'll start dissecting a little bit.
Yeah, so I have a background maybe like a lot of people. I was taught to go to school, get good grades, which I did, get a job with good benefits. And I have a very educated, Chris, I'm a master's in computer science. So I was a programmer out of school and spent some time at AOL in the mid-90s, and then joined a software startup in 97 called Web Methods. This is important because this company went public 3 years later, and at the time was the most successful software IPO ever. And it was cool because it put a bunch of money in my pocket. And I coasted for a few years until I read The Purple Book, which really messed me up because I was very confused about my financial plan, which I thought was brilliant. And it apparently was not. So 3 months later, I came home to my wife and declared that I had quit my job. And she goes, oh, what's your plan? I said, well, I don't have one yet, but we have a bunch of money, so who cares? And so I just started learning about how money works. I took a commercial real estate course. I learned how to trade stocks and options. I flipped a couple houses. So, but my big idea, my path to financial freedom was a restaurant franchise, obviously. So I bought a 10-unit franchise, and I did it like they were telling me to do, to hire a guy to run it all. So it's basically a passive investment, which was true for about 2 years until the recession came. And then it was no longer a passive investment. It was the actual opposite. It was an active nightmare. And revenue went down, started losing money. I had to fire the guy running my 6 restaurants. Now I was driving 1 hour one way to run 6 restaurants, and it was like trying to catch a falling knife. I just couldn't do anything. I realized I had to sell it, and realized also that no one was buying a restaurant, money-losing restaurant after the recession. So I basically gave it away for all cash, fast close, if you know what I mean.
Wow.
And basically lost all my IPO money. I was fortunate enough to have another $200,000 of lines of credit that I also maxed out, plus my credit cards, to extricate myself out of this, and only with one lawsuit, which was kind of cool. And so while this is going on, I needed income. So I'm losing money. And I remembered my 2 house flips I did in 2006 and 7, right before the recession. And I started flipping houses in earnest. I was using hard money at first and started borrowing money, flipped about 3 dozen houses over the next 3 or 4 years, and then got into apartments in 2011, which was a nightmare in itself. That was an absolute worst experience for 18 months for a variety of different reasons. But finally, after 18 months, it quieted down, and then it started sending me $1,500 a month in mailbox money. And that's when the light bulb went off, and that's when I started to shift over. And that's when I started blogging about it on my own site, and then on the Bigger Pockets. I have 151 articles on there, put together an analyzer tool, created a course, and then through that started actually doing deals and joint venturing, and then created Nighthawk Equity. So we have about $300 million of multifamily real estate. We've exited about 7 deals since we started in 2017. And the mission today is really financial freedom with real estate. And it's not maybe in the way that people think. Single family houses normally associated with that's really hard to do, which maybe you can attest to. And with the apartments, it's just you can do it within a year or two.
Like I said in the intro, I think the reason I think our stuff marries well, so to speak, is when we go out and teach the 3 payday system, they then want to do what? They're going to parlay that into something, right? Or whether it's mobile homes or large multis. So that's why I love that you're on for that reason, for a lot of other reasons. Let me peel back a few things. All right. So that's why you saw me taking notes. So the curveballs you hit with the restaurant, which I wasn't aware of, that's why my eyes were wide open, were for some would have been insurmountable. So I got a couple questions around that. Then I'll pivot into the real estate. What kept you going, if you remember? And then what was the impetus a little bit deeper behind the curtain for the real estate? Or was it just, hey, I stumbled upon, like you just went over? You talk a little bit about that, the struggles, and then getting out.
Yeah. So honestly, during this time when I went out on my own, so before I went out on my own, I felt like I controlled basically my life. I do this happens. I do that happens. When I went on my own, that mechanism stopped working. And I realized that I didn't control everything anymore. In fact, I controlled very little. And so I got to be honest with you, during this time, my faith really developed a lot because I really didn't need God before. And all of a sudden, I was in a desperate situation and I couldn't get myself out of it. So I really developed my faith through this time. And that's really what got me through it. I would say God showed up in a few miraculous ways where you just kind of shake your head and he was like letting me know, hey, I'm here. I'm looking out for you. You're going through a crap storm right now, but it'll be okay. And so as these waves of crap came over me, it became a little easier, meaning that I accepted the situation faster than before. Before, it might have taken months of anger and frustration and depression, and now it only took a few weeks. And so now I'm relatively calm now, which is kind of cool. So I'd say that kept me going. The other thing also is I really felt called to leave my job and had it on my own. And so in 2013, when I fired my guy, I was really dusted off my resume. I was like, man, should I go get a job? Like I was making $120,000 per year, but before then, should I get a job? And I was like, no, I don't think that's my destiny, right? It's really to stay an entrepreneur. And how should I do that? And that's kind of when I looked around. This was 2009. When I looked around what to do, I came up with, hey, let's stay in real estate. It worked really well. Let's kind of double down on that thing. So that's kind of kept me going. I felt like that was my calling. And my calling really was to share my story and my successes around financial freedom. And it took me 10 years to figure it out. So I kind of consider myself the crash test dummy of financial freedom. I've done so many things. I know the pros and the cons, what works, what doesn't. And so that's kind of when I'm talking about now, multifamily. Why multifamily? I can talk firsthand on other reasons why there are fundamental flaws in some other strategies out there.
So I've been married 39 years this August. Your wife went through that with you, obviously.
She did. Yes, that's wild. She was my rock. She's really calm as a cucumber, always supportive, also challenging me. But yes, that was a major factor, I would say.
So I brought it up. Like, it had to be, obviously. Now, okay, over your left shoulder, for those of you just listening, need to jump on YouTube, but over your left shoulder is financial freedom, real estate investing. Can you talk about kind of what sparked it? Can you talk about the book a little bit and where they can get it?
Yeah, it's really, and notice it doesn't say anything about apartment buildings on the cover, and I do that on purpose because a lot of people have preconceived notion about apartments. It's an advanced strategy. You need a lot of experience and a lot of money for it. Really, what I want to do is I want to pique people's interest who read the Purple Book and want to become financial free with real estate. And so I kind of start from a single family house investing perspective, and by really telling my story about my frustrations with flipping and my inability to scale the rentals and things of that nature, and then, pivoting to multifamily and what that's. So it's a good introduction into the world of syndications. Also, what are the steps to actually close a deal, and then how to scale that, and why it's such a powerful mechanism to become financially free, literally in many cases within the year of getting started. It's wild.
It's amazing because we say it a lot. It's not just the deal or the skill set for the deal, but all the other stuff you went through, the character building, the mindset piece, right, is huge. Okay, so let's pivot to multi-units for a second. Talk about let's say, I'll say the supply and demand, but I'll say also the ease or not ease of doing a deal, let's say for under 50 units. And is there a little bit more of a window there, so to speak?
Yeah, so let's talk about some of those preconceived notions, right, about getting in apartments, because I have conversations all the time, Michael. It's a very advanced strategy. Let me flip or do some rentals for the next 5 or 10 years, and I'll take that experience and the money I make, and I will then graduate to apartments. It's not a bad plan. It's better than 99% of other people in there, but it's just a very slow plan. Yeah. And it's really because of two primary preconceived notions. One, that you need years of real estate investing experience, and by extension, single family house investing extension, which, by the way, I applied when I was calling on brokers in 2006. I got no credit for my house flips and rentals. They're like, oh, yeah, cool, Michael. But how many apartments have you done? I'm like, well, none. But look at all these houses I've done. Like, yeah, you know what? How about this? You send me your proof of funds. I'll send you some deals. I'm like, what the fuck? What's going on right now? So even if you were to spend 5 or 10 years flipping and rentals, it's still not going to get you where you want to go. Now you've wasted 5 or 10 years. So the way you overcome that is actually by using some of the right words so you don't sound like an idiot, and also by building a team around you that's experienced, and you leverage that team's collective track record when you speak to brokers and investors. And now I can make you sound and look like an experienced investor in 30 days. So you don't need 5 to 10 years. We can do it in 30 days by applying some of these techniques. The second problem people have is, I don't have enough money, so let me save it. And then they buy a rental once a year, or they buy a small multi once a year, every other year. Or I know better even yet, I'm going to get a HELOC on my house, and I'll use that. Again, not bad. It's just very slow and unnecessary. So what we teach is what Robert Kiyosaki talks about, is other people's money. And in our world, it's called syndication, which is just a fancy word for raising money to buy real estate, or raising money to do anything you want, buying car washes or anything you want. It's just the art and science of pooling investors' money, you doing all the work, essentially, you getting sweat equity, and that you getting fees for that. And so with that, you can readily raise money yourself. And the other big component that's very different in the multifamily world is it's more of a team sport. Specifically, it's more of a partnering sport. So joint ventures are not only common, they're almost in place 100% of the time, meaning that people think they use their own money. No, you got to raise your money. Like, I can't raise money. Okay, well, maybe you can. Maybe you can raise $100,000, but you need $1 million to buy a $4 million house, a building. What do I do? And there's this joint venturing component. Because what happens in our world is there's two personality types. One is a deal finder. The other one is a capital raiser, just the way your personality is. Some people can do both, but one is a little more numbers oriented, a little more detail oriented. They're more inclined to analyze deals, talk to brokers, due diligence. They're a little bit more like that. And they really struggle with raising capital because they're kind of maybe scared. But then there's the other half. The other half is the other way around. They don't really like numbers at all. Like the sign of the spreadsheet makes them break out in a cold sweat, really. but they're more relationship people, right? So they're, from a personality perspective, they are more inclined to want to raise money because it's a relationship thing. And those two perform the perfect joint venture relationship, because the capital raiser who has access to money and the personality to raise it really does not want to find deals, right? And the deal finder resists the capital raising. You put them together, and this is why people now can buy a $4 million deal, which is a good entry point in our world, because of that.
Yeah, it's awesome. And all the pieces I mean, obviously we've talked about this one or two times, Michael, but all the pieces coming together are pretty cool. Talk about, let's do this. Talk about some deals right now that you're got your fingers on, because that'd be a cool, like, what's happening right now in Michael world.
Yeah, in Michael world, our investment company is called Nighthawk Equity, and we actually have a deal on a contract right now, and which is pretty cool. It's in the northeastern part of Atlanta, where the majority of our portfolios. We have about 1,800 units, and we've exited about 6 or 7 of them. And yeah, so it's a Class C, C plus value add deal, and we are also joint venturing. So we are partnering with what's called fund managers. So these capital raisers is the term I would use for that. The technical term is more like fund managers. So these are people who are specializing in raising capital. That's their career path, kind of like a deal finder's a career path. And the safe way to do it, the way the SEC requires us to do it, is to basically create a fund. So it's basically these capital raisers create their own entity and their own tax ID and their own private placement, their legal docs, and they raise money into that. And then they write us a large check. And for that, they get preferred terms, and they make money running the fund, and their investors get the returns that are essentially similar as if they were to invest directly with us.
Awesome. You mentioned the location. Do you guys talk about how you pick geographically, Michael? Like, talk about that a little bit, because I know, like, our niche is a little different. Other niches, they do absolutely pick geographically. I'd like to hear yours.
Yeah, that's a great question. I'll answer 2 ways. One, and what not to do, which is always what I did myself, and then what we actually do today. So when I first got started, we were partnering with people in our community that I had built. And it was really cool because I got deal flow, which was fantastic. And I was able to raise money for them, which is also cool. But I kind of went wherever the student was finding a deal. So we had deals in Chattanooga and Birmingham and Huntsville and on Mars. And it was cool to get started, but it made the asset management very problematic. And so a year and a half into this, I realized that this is going to get very complex, and we stopped doing that. So the best practice really is to really pick a market that's at least large enough so that you can analyze, 3 to 5 deals a week, something like this, to get deal flow, right? So if you're going to Huntsville, which I love, there's not a lot of volume there, so you might have to pick another market if you want to go to smaller markets, or you pick larger markets like, well, there's a number of them. We picked Atlanta, but there's, again, number of great markets out there that are, in general, are growing, and you can buy cash flowing properties. In our case, that was Atlanta, but like I said, there's a number of them.
Yeah.
And so we, at one point early in 2019, decided that we would go deep in Atlanta. There's a number of advantages of that. You can use the same property manager, using the same systems, the same P&Ls. You can start sharing resources and contractors, and you get a lot of economies of scale. Also, you do reduce the risk that way, right? And so investors are always looking at the risks. And so you going into a new market is risky, right? If you're saying, hey, we already got 9 other properties here, yeah, and it's like right next to the one, it reduces the not only the perceived risk, but the actual risk. So from a geography perspective, find a great market that has long-term growth, and then just kind of go deep in that market.
Awesome. And then talk about what's next? What's going on for either you and or your students, or both? Like, what's in the horizon for 25, and then what's the longer term picture, if you don't mind sharing?
Yeah. So Nighthawk Equity, we have struggled to find deals in the last 18 months. And so we instead spend our time really focusing on the operations. So there's a few more things that we want to finish up through the middle of the year. And then we're going to continue doing deals and raise more money. But really the idea is to scale the organization, right? And you can do that because you can get a deal, you put a proper manager in place, you stabilize it, and you kind of do it again. And if you have a cookie cutter process like we do, we should be able to do 3 or 4 deals per year or so. And we have not been doing that. So that's kind of growth there. On the educational side, I want to expand my message, really. So we've really only been speaking to people who are looking specifically for multifamily help, right? And so what we started doing now is expanding that a little bit for people who still want real estate to be financially free, but who may not be yet convinced that multifamily is the way to go. So that's kind of a new audience for us. We want to kind of expand the message a little bit. So that's kind of what we're doing right now in 25.
Before I forget to ask you, can you just give them a couple ways to reach you? Any and all that you want, whether it be I mentioned the podcast, but give them all the sites and any free gifts or any information you have for them.
Yeah, if people are more interested in learning about apartments, they can go to apartments101.co.co. It's our little mini course, our 45-minute course gives a good introduction into going from single-family house investing to apartments and how syndication works a little bit. So that's apartments101.co. And another great resource is the book you mentioned, Financial Freedom with Real Estate Investing. It's got the yellow cover. And the podcast has the same exact name, looks exactly like it, so it should be pretty easy to find. So those are some ways people can connect with us and learn more about apartments.
Nice. And we'll put that in the show notes. Obviously, Michael, I appreciate that. And then maybe there's got to be some stuff. I was on your show, so I know this happens. There's got to be some stuff that I didn't ask, and we could spend probably several hours, but what's one or two nuggets that didn't hit you on that you'd love to make sure you share with the Wicked Smart audience?
Yeah, I know. I think really sitting down and creating clarity around what you want. Again, example of what not to do is always me. So when I started flipping houses, I really wasn't clear what I want, or at least not clear enough. I read Rich Dad Poor Dad, and I wanted financial freedom, passive income, and then I started flipping houses. Does that make any sense at all? No. It took me 3 dozen to figure it out that flipping houses is not very passive, right? So whatever you're doing, how scalable is that strategy, and how passive is it at the same time, right? Because I can scale flipping and rentals, but it's not very passive. In other words, I can scale it, but I have to work more. What I'm looking for is I'm looking for a strategy that's scalable without having to work more, right? And so in the apartment world, I can buy like I described, I can buy an apartment building, stabilize it. That's a lot of activity for a couple months to get all that stuff done, like it is, flipping a house or whatever the case may be. But then it quiets down and stabilizes, and you can do it again and again and again. And I don't need a big team to do it either, right? So how scalable is it? And how much extra work is it to scale? And the other one is a bit of a matter of risk, which I didn't consider with all my strategies. It bit me in the butt with restaurants specifically. I did not realize that a high-end pizza chain might be affected by a downturn in the market. Never occurred to me, right? Single-family houses. Now, I wasn't affected by that, but I know a number of people, maybe you as well, who got their butt kicked in 2008.
Yeah.
So I don't love that either, because I spend 3 to 5 years building up whatever strategy I'm building up, and all of a sudden something happens that wipes me out. Now, multifamily wasn't unscathed in 2008, but there was hardly any foreclosures. So what a lot of these owners did is they just wrote it out. They just didn't sell, right? Their rents kind of stopped growing. Maybe the occupancy went up a little way, but the break even is so low. They're like, I'll make less money, but I'll be fine, right? With houses, they actually lost their houses. And so whatever strategy people consider those 3 things. It's really how scalable is it with how much extra work, so how passive is it? And then really consider the risks of those strategies. So that's my advice, is to kind of create clarity around what you're doing, and then find out more about this strategy. And then once you decide, then just go in, commit to that thing for 5 years. A lot of people jump around. They're like, I'll flip this land and I'll do this thing. You really got to give it 5 years to get good at it and to build some kind of scale.
I love that you said that, for sure. And what else you said that I say at the beginning of every boot camp, I know I said it last week when the students were in here, is with clarity can be exponential growth. And you started right off saying that. So I love that as well. Michael, before we hop, I got to know the significance of the giant fish that sits atop of your head behind you on the wall.
Yeah, so I've been deep sea fishing, I think, 4 times in my life, and I was 0 for 3 before this trip. This was late at 23, and I actually met with my 2 partners in Nighthawk Equity, and we don't normally do fun things. It's always like, let's get stuff done. But we actually went out and off the coast of Miami, and then we all caught the sailfish, and I was like, man, that is amazing. So this is now on my wall. But really, to me, like, financial freedom is all about experiences. Yeah. Like, there's other people who want to get rich and they buy stuff. Okay, that's cool. For me, like, if you look at the photos on my wall, it's all about experiences, and a lot of it with my family as well. So to me, I associate experiences and the ability to afford those experiences, and also to afford the time away from whatever is income producing. I associate that for financial freedom. So that's why that's on my wall.
I guess it's not by mistake. I believe in the energy that most guests, I'll go, boy, we're in sync. So I've said for years that one of my major whys, especially at my stage and my age, is to do the thing, create enough money and wealth, sure, but to do the things that money and wealth can't buy, which is to create experiences. So we're on, as usual, on the same page again.
And you're a little bit ahead of me in some ways. You have your family involved in the business, which I have my two oldest are involved in my business as well. And that's very satisfying to me, creating enough opportunity. And I'm not saying they're going to take over necessarily. That would be cool. But creating opportunities so they can be involved in the business. And now you have one extra thing you can talk to your kids, especially as they get older. So to me, it has a bit of a legacy component as well.
Love it. Love it. Nice way to wrap. Michael, I'll put everything we said in the show notes. You are awesome. I look forward to hanging out again, my friend. Okay, Wicked Smart listeners, that wraps up our time together today with Michael. I hope you guys enjoyed the show at some level. I obviously expect you to, but I'm a little biased from what I obviously think you did. I think you got a lot out of that. I think you got a nugget or two and some action items, but I'm a bit biased. So if you did, go ahead and rate and review us on your favorite podcast app. For sure, share it with a friend. And lastly, I haven't said this in a while. I'm fully aware after 500 plus episodes that you take 30 or so minutes, roughly, out of your limited 10,080 per week. And we don't take it lightly. We seek high and low for guests like Michael that have experience. We listen to you guys as you give us feedback. We have students on so you can get like real stories from, hey, I had a job, or hey, I was broke and I made this happen. This is real stuff, guys. And if you want to learn more about it, I've got some really cool things coming up. I think you're going to hear this, I don't know, somewhere around February. Well, we have another live in the trenches boot camp coming up at our office right here through my window. You see me pointing. You'll sit in the conference room knee to knee with myself, my son-in-law, Zach, my son, Nick, and one of our coaches, usually Rick, who has an amazing story. So picture hanging out with the four of us for 2.25 days while we make live calls. If you bring leads, we'll make them for you. If not, you'll witness it. We'll structure deals. We'll then make appointments for the people in the room to go to, and we'll get deals under agreement. Can't get more hands-on than that, guys. To learn more about the bootcamp, go to smartrealestatecoach.com/ITTB-pod. That's ITTB-pod. Go off and make it an outstanding rest of your February. And let's make the next month count, guys. Soon, we're going to be looking back saying, hey, 1/4 of the year is gone. Have you accomplished 1/4 of your goals for the year? Let us help you do that. I'd like to personally talk with you on that note, by the way, before we sign off. Go to smartrealestatecoach.com/Chris pre-call, and you and I can sit and chat. Yes, that's going to hit my schedule personally. I look forward to chatting with you. Make it an outstanding week.
Hey guys, are you simply sick of juggling a dozen different software tools for your real estate business? I know I was, and I know I'm not a tech person, so it was frustrating. A subscription for this, you got a subscription for that, and they don't even work together out of the box. That's very frustrating, especially in the real estate world where your best time spent is going to be out in the field or on the phone with sellers, and now you're stuck hiring a tech guru just to make all that sync up. So let's ditch the chaos and let REI Black Book handle everything. Automate your lead follow-up, track every deal, analyze things quickly for you, make offers all on one platform. In fact, with the Wicked Smart platform, we now have access, if you're in the Wicked Smart community, to all the other associates' properties. Can you imagine that? So you're brand new in the business perhaps, and your seller looks on your website and sees 20, 30, 40 properties, instant credibility. So you're going to get everything on REI Black Book, from our custom workflows for lead generation all the way to closing. It has it covered. Try it today for just $1, guys. Visit smartrealestatecoach.com/REIBB-DD. smartrealestatecoach.com/REI, B as in boy, B as in boy, hyphen, D as in dog, D as in dog.
Thanks for listening to the Smart Real Estate Coach podcast. If you're ready to invest in yourself and take your investing to the next level, check out our 90-day Jumpstart program by going to smartrealestatecoach.com/jump. That's smartrealestatecoach.com/jump, because now is the time to act boldly in this unprecedented market shift.